G'day everybody. This is an update from Affinity just on how the markets are going in light of the coronavirus that's affecting the world. What we want to touch on a couple of quick things, and markets have dropped and written off all the gains that we've made in last year. So we haven't written off the rest of the world. We've had an amazing year in 2018 and now we've unwound that with this event. What do we know? Well, at the moment we're facing a global epidemic, and all of the information about the medical impacts of that and the risk factors are out there all over the news. We believe that part of the problem is the media have been overselling risks and scaring people. And in Australia, we've seen, in particular, panic buying of things like toilet paper, which doesn't make any sense. But equally, we've seen that same sort of panic happening in markets where people are panic selling things that aren't going to go out the back window. There's going to be impacts, we know this, and the governments all around the world have started stimulus packages. The US government just announced yesterday a $1.3 trillion package, which is amazing in size. That's bigger than our economy, to literally give cash to people to help them get through this crisis. And in Australia as well, we've got a lot of government stimulus. There's packages for people who are on Centrelink benefits. There's stimulus for businesses. And I imagine over the coming weeks, there'll be a range of other things they're doing to help make sure that we keep economically afloat while we get over this health epidemic. Of course, markets react very emotively in these kind of environments, and you'll see on the chart behind us, the global financial crisis was a similar story. There was a catastrophe in some sort of environment. Markets punished that severely, but then they recovered. Now, it can take time for that to happen. The underlying assets that we own in all the portfolios that we put together are still good quality assets, and we expect that they will still be here in 2, 3, 5, 10 years' time and still be profitable businesses. Everybody is going to take some sort of hit during the lockdown periods that are happening, and markets have a tendency to overreact to that. Sectors that might get impacted though?
Well, obviously sectors that will be impacted will be sectors like Sydney Airport, where air travel has reduced dramatically, car parks that are associated with that, restaurants, entertainment, casinos, etc. They'll be impacted right across the economy, but some areas will be impacted far more greatly than others. We just have to ride with that, because quite simply, those industries will take some time to recover. It'll affect their share price. It'll affect their dividends for the forthcoming year, but they will be back on deck, but it'll just take time.
And that's probably the big thing we need is patience in this time. There's global coordinated efforts to contain this virus. We've got an unprecedented level of response. It's in excess of Ebola and SARS. It's impacted more countries, but we've also seen more coordinated response as countries have come online to contain this. Vaccines will be developed. We've already got some very positive news out of Melbourne with some mapping of the immunisation required and things like that. So even in Australia, we have made amazing inroads into vaccines, which will come online at some point in the future. Whether that's 3 months, 6 months, 12 months, we don't know. But we know that this is not something that will be around causing us strife forever. Markets too will respond as soon as they see the light at the end of the tunnel. And this is the part where we know as investors that we need to be patient. There's a fear response, and people are bailing out on very good investments because they're worried about the end of the world. Whereas once markets see that recovery, China has got their coronavirus issues under control. There's been no more major expansion there. Many other nations are already starting to get this under control. We've got to see Europe. We've got to go through it ourselves in Australia, and we've got to see the US get this under control. And our thoughts are that once that happens, however long that is, markets will respond. We've got some upside in this moment, though. Take advantage of whatever opportunities arise. For our clients that are part pensioners with Centrelink, at the moment, we are looking at the opportunity, if you're asset tested or potentially income tested, to report to Centrelink what your new balances are on your investments, because majority of clients have had some sort of drawback in their value. If we now update those values with Centrelink, for every $1,000 that you are down in your portfolio under the assets test, you'll get $3 a fortnight in your age pension. So while we're going through this and waiting for the recovery, might as well get a little bit extra in the age pension. Finally, we've got our business continuity plan here at Affinity. We are a very adaptable business. All of our staff have the equipment and the ability to work from home. We have been mobilising that so that each of us can operate from home in the event that we have a lockdown or we're unable to work out of this office. At this point in time, there is no requirement to leave here, and unless the government change that, or in our offices, Brisbane markets that we're a part of, if they shut down the offices here, well then we will all be working from home. But our business is prepared to continue operating even if something like that happens.
Well, if you need some help with going to Centrelink, you can drop us an email or ring the office, and we'll give you your account balance as at the previous day, and that can be taken on to Centrelink and see whether there be a benefit for you by having a reduced asset level. Well, there's an old Warren Buffett saying that the stock market's the arena where wealth passes from the impatient investor to the patient investor. That's easily enough to say in a difficult time like this, but in the long term, what Mr. Buffett has said is completely accurate. So be calm, view this in the long term, because that's how your investments have been placed, and we're here to assist you where best we can. Thank you.